Good evening, everybody. Sorry for the delay. It's been a bad hair day. I spent 20 minutes looking for a contact lens that I never found. Then when I came down and clicked the computers back on, so the screens came up, the middle screen didn't come up. Then I had to reboot. And then it was rebooting, and they said, don't turn off your computer. We're upgrading your computer. When that was done, I'm thinking, okay, here we go. And they said, we're back to zero. We're going to clean your computer. Don't turn off your computer. And on top of that, the dog pooped on the rug stage. Okay, we're going to be looking at what we call strong trade entries, which is kind of the accumulation of being able to identify what the market's doing, and then knowing, if we know the direction of the market, knowing which of the strongest signals that we want to go after, and the trade confirmation. So basically, I could have just put this screen up. So we're trying to identify the high probability trade setups after we know the market direction. Then we've got the little bit of a head start by knowing what the pre-market futures and what the pre-market prices are going to be doing. And then an entry-level confirmation. So just a quick review. We've got 4 different market combinations that help us decide what to do on a trade. And that's after we kind of analyze which way the market trend is going. So if we think the market is heading up, and the next day the market opens positive like it should, but your stock price that you're ready to go after opens lower, obviously you don't do anything. But you do enter the trade if they open it lower and then come back up through the previous day's close, which means all they did was open it lower and the buyers are stepping in. If the market opens lower and your stock opens higher, you don't have to jump right in it. You can wait to see what whether the market trading down, the market in general starts turning back up, or if the stock continues to show strength even though the market's opening lower, then you can go after it. Then the ultimate entry is if the market opens positive and your stock price opens positive, confirming the signal, yeah, you buy it right away. And then the final one is if the market opens lower and the stock opens lower, yeah, you don't do anything. Just not a good open trade that day. So with that, we know what the market direction is right now. So we can get a much more accurate read of what pattern signals produce the strong price moves. And obviously we've got a couple factors that dramatically help us analyzing the market trend. You can see where the reversals occurred in the overbought area. You can see when it closed below the T-line. You can see that it stayed below the T-line. And it popped up, did a bearish kicker signal, a good indication we had a bearish J-hook pattern. Yesterday it was trading positive going into the Fed announcements. And when they reported, they just started, well, didn't sell it right off, but eventually sold it right off. And so right now all we can assume is that we're in a downtrend until we see a candlestick buy signal and a close below the T-line. So what was another aspect of thinking that things were going to go lower? Because we could see we were in a wave 1, wave 2, wave 3. We calculate it was the same magnitude as this wave. Kind of figured the probabilities are that we're still heading lower. And the fact that they yapped the NASDAQ down kind of through this little support level told you they were still selling this market off. So with that, what we can do, because if you analyze or identify the strong bullish signals and bearish signals and patterns, we think the market's heading lower, and we can see a pattern setting up like a dumpling top, and the market's starting to sell off, and the pattern is starting to confirm with a strong selling. That becomes a high probability trade setup. So the dumpling top was pretty prevalent here in the last few months. And so what confirms a dumpling top, just like what confirms a fry pan bottom breakout? Well, a strong breakdown. So there's your little shooting star best friend, produces a strong downtrend. So again, this is just kind of putting 2 plus 2 together. But if you can see the pattern, then you can see the big sell signal that not only confirmed the pattern, but told you they weren't supporting at the 50, just much higher probability that you're going to be in a strong downtrend. Same thing here on this one. When they started breaking down through this level, look at your little evening star signal failure at the T-line. I told you there was some good strong downtrend. Now, there is about, let's see, 2 categories. One, there's an extremely high probability pattern that we see of a doji sandwich setup that if it opens positive, we know it's probably going to trade positive the same magnitude as this candle right here. And we know the probabilities are pretty strong if this setup is occurring and they start trading positive, we probably have a doji sandwich in progress. And that can be both bullish or bearish. And when you start adding the element of got a doji, left-right combo, possible pullback to a support level, but when they opened it lower, we knew immediately, obviously with the doji rule, that it's going to trade lower. And that would kind of anticipate that we are looking at a bearish doji sandwich, but meant they are failing at this level. They're not staying above the T-line. That's what puts you in a high probability trade. Not only a good probability trade, but in a direction where the possibilities of being in a strong downtrend are strong. And that's basically what we're trying to do every time we put on a trade is first of all, we want to be in the right direction. And then secondly, not only do we want to be in a right direction, we want to be in a strong right direction during that current market trend. So there's a lot of little subtle sell signals. First of all, you can see the strong sell signal, the kicker signal. Then you've got another little sell signal where if they come up to the T-line and then fail, get ready to short it the next day. That was also evident over here. There's your first sell signal. There's your shooting star gap down, your second sell signal. And then see what it did yesterday, came right back up to the T-line. Now, I always like to point out the fact that when they come right back up to the T-line and fail, that's significant to us because if we consider the T-line as a natural support and resistance level of human nature, which nobody has on their charts except us and a few other groups right now. That if it comes right up to that level and fails, it's not like everybody was watching to see if it's coming up to this level. We have it on here, but nobody else has it on there. It comes up to that natural resistance level. Then if they take it back down, get ready to short it the next day. There's your strong sell signal. And there's your 2+2 analysis. Short covering. Where did they take it to? Right back to the T-line. And do a bearish engulfing signal. You can definitely be shorting it on a lower open, because what's that next pattern we're anticipating? A bearish J-hook pattern. So this is the combination of knowing what the signals look like, knowing what your patterns look like, and knowing what your probability factor is using the T-line. So even when you're trading the biggies, like Amazon, when the market turned over, Amazon failed right here at the 200. And then it became a strong short when it closed, or opened lower and started trading below the T-line. Then you had on the, is that the last time they announced interest rates? It seems too close. Anyways, bearish kicker signal. And notice what happens. Every time they take it up to the T-line, they fail. Took it basically right up to the T-line yesterday and failed. Now what do we have? We have a doji. Would you be shorting Amazon here? Because you're getting into the oversold area. You're down here near a potential support level. So what are the two criteria that would say, all right, maybe even the three criteria that say, yeah, I can still be shorting? One, if this is wave one, this is wave two, wave two, this is wave three. Wave three says it's still got some more downside to equal wave one. I forgot what the second one was. But the third one is, we've got a pretty good trend indicator with the doji. Again, using the doji rule, it's going to move in the direction how they open after a doji. They opened up positive and started trading positive. A good indication this area is acting as a support level. If they open it lower, and that's probably going to be a function of the markets opening lower tomorrow, you've got a bearish doji sandwich that tells you there's still a lot more force to the downside. So just having those, what do I want to say, that knowledge in your head of knowing what should happen after a doji allows you to make very calculated decisions. So there's your sell signal. Just a very simple rule that if you see something trading positive and it comes back down below the T-line, it's telling you they failed, meaning they being the bulls. Take it up through the T-line, come back down, they failed. There's still going to be a lot more selling. NVIDIA, same thing. If you were short, where would you start covering your short positions? Right here. What would you watch to do here? If it started trading positive, you could be buying. The fact that they gapped it back down, doing kind of a bearish best friend, showed you were in a downtrend. And yesterday, very compelling that they were trading this way up here. Now, I was still in some put spreads, and I knew what my decision had to be tomorrow or yesterday. If they closed up here, I had to close out that trade. But the one thing I have learned, and this is, again, not because I'm any great wizard, that I've discovered that if it's up here early in the day, it's already here. We think we're still in a downtrend. So there's nothing wrong with holding it and see what it does by the end of the day. And if it does close back below the T-line, you know you're still all right. And even getting ready to go short again if it opens lower the next day. So all this is based on your first assumption is what direction is the whole total market. Now you can go scan for the best, I'd say the strongest of your signals and patterns. And then, oops, I guess I got it listed here. So that's what we're going to do Saturday. Saturday's going to be a full day training, taking all this information right here, because that's our visual analysis. Then we're going to go into here, which is kind of that going into the mental process of investing. So as Yogi Berra said, 90% of this game is half mental. You can have the best investment program in the world, but if you can't control your emotions, you're not going to do very well. So this is part of what definitely gets your emotions out of your trading. So that's Saturday, which in most of the country it's going to be cold and rainy, so you might as well sit because you'll get a lot more information than you expect. So again, the strong entry confirmations definitely improve the probabilities of being in the correct trade. All right, let's go to live charts. I think. Oops. Oh, how close did I get? Yeah, I'm going to do this real quick. Close. All right. Let me know when you're ready. Okay, good. All right, what do we got up here? Again, we're still and assuming this downtrend is in progress. Now, remember, we're not trying to do any fundamental analysis or research or any analysis. We're watching to see what everybody else's analysis is doing. So the assumption can be that if this market is trading lower because the headlines are that inflation has to be stopped with increasing interest rates. If we increase interest rates, it usually is bearish for the market until they change what they're doing or have a solution. Right now, obviously, they're not going to be changing what they're doing, and they're not, so nothing's changed. You just have to assume the investor sentiment is going to remain the same until they change something. So now that should be the assumption. Obviously, the market moves around in trends based upon people short covering, all sorts of things. Thank you, Diana. So right now, with the markets producing this type of trend information, the NASDAQ trading lower, the S&P trading lower, not showing anything yet that would indicate a change of investor sentiment, and the transportation index still trading off. So the assumption is we should be predominantly short. Now that's pretty obvious at this point. It wasn't obvious earlier. However, when you do the simple scans at night, there's a few other factors that kind of indicate what investor sentiment is doing. One is if you do your scans and it seems like you're getting a lot better short trade setups than long trade setups, yeah, that's a good indication that there's not as much bullish sentiment anymore. So that puts you in a natural situation of some of your long positions that are starting to get a little bit dicey. You close them out, and then you move that money to the long positions, the short positions. Well, that essentially kind of self-cultivates the portfolio so that when it's in this area, you're already predominantly short because you've been adding shorts and closing long. So it's not like on any one day you decide, oops, I'm going to close out all my long positions and buy short positions. It's usually a cultivation process. Let's find the next. Where do we find that? Oh, the books. I've written 3 books. Usually you want to be reading Eliminating Emotions after you read High Profit Candlestick Patterns. And you get a much better price on our website versus Amazon. I think Amazon, they sell it pretty close to full price. Or on the website, it's half price. Oh, Becky or Jim, do we have a link for the products area? Okay, so just going to kind of point out that there was a lot of strong sell signals, whether it started here or started right here. The assumption was that you were heading in a downtrend. So these are ones we've been short now for a while, and most of it is from right here, where if you weren't short anything right in here, that kicker signal is, again, one of your strongest reversal signals, telling you there's been a drastic change of investor sentiment. We recommended this one today because there's your dumpling top, and there's your failure right there, a confirmed failure. Notice how it broke this level and broke the 50. And what do we expect from a dumpling top? That big rush to the downside. Now, I should probably clarify that. You're probably going to get a much stronger price move coming out of a pattern versus just a non-pattern that might be trading lower in a downtrend. We're looking for the patterns that not only are heading in the right direction, but heading in the right direction with a lot of force. And TPIC, same scenario. There's your sell signals up here. There's your confirmation. If you closed out somewhere in here, there's your reestablishment with your bearish best friend. Where was your next likely target? Down here at the 200. So what were we getting ready to do? Cover the short position. Had it started trading positive from here. Now what's it telling us? They're not even supporting at the 200. I think there's a little gap right here, so it's still got some more downside to it. Wayfair, another one, making very good money on shorting this one, especially in the short spreads. Bearish kicker signal. And this is where the 2+2 analysis comes into play. You've got a bearish kicker signal right here, telling you're probably in a downtrend. They popped it back up. And then look what they did as soon as they hit the 50. They gapped it back down to what a bearish kicker signal. So not only do you have a bearish kicker signal, which once again is your strongest reversal signal, but the fact that they failed at the 50 is something that everybody else is watching. That's going to add a lot more strength to the downside. Carvana. Whoop. There's your reversal. There's your trend kicker signal. There was your failure yesterday, right at the T-line. And not only a failure, but brought it right back down through to the low end of the trading range. That was also a good indication that if they opened it lower, what's all the analysis you can put into this view right here? Well, failed at the T-line. That's the one, again, that's relevant to us because it failed right at a level that we know is a natural resistance level, and it failed at the level that everybody else wouldn't be watching because they don't have the T-line on their chart. Are the shorts in put options? Yes. Either puts or put spreads. We will be doing another evening session in the members area probably pretty soon, meaning within the next week or so, because a lot of people say or think, well, this is going down, I'm going to buy the puts. Well, probably that's correct 20% of the time. We're in put spreads about 80% of the time because of the leverage, because of the lower risk factor, and less market exposure. So we're going to go through that process. And everybody say, well, I don't know whether I can learn spreads. You can. It's so simple. All you're doing is buying one and selling one at the same time. And you don't have to figure out what that price is anymore. They do it automatically for you. Oh, WB, what type of question is that? It's hopefully the put spreads are working based upon the direction of the, oh no, I'm short 62.8. I have no idea, WB. If we're looking at something like this, oh, way more than 50% of the time, yes. Magic, don't we go through this every night? Wants a guarantee? All right. 66.4. How's that? No, I'm hiding the true fact that it might be 78.6. Every few minutes. You here. Appreciate it if you could advise how where to find. AM, you will have the recording at the end. Jim is recording this tonight. All right, so where were we? Carvana. Not only did we have a failure at the T-line and trade lower, that's a very strong indication they're still selling. So if they opened it lower the next day, what was our probability factor? Extremely high that now you're in a bearish doji sandwich. And if it does a bearish doji sandwich, meaning this candle here is going to be about the same as this candle right here, what's that tell us about a level that everybody else is watching? This support level is not acting as support. You're now in wave 3 to the downside. And NVAX is one that we've been in put spreads now for a while, and they're working out very nicely. So I hate to regress here. To put on a spread, there's one aspect of a spread that you have to be always aware of. if you're going to put on a put spread, remember what the trade is. It's buying one side and selling the other, or selling one side and buying the other, all at the same time. Well, if your volume on one side is good and your volume on the other side is not very good, they're going to have a hard time combining that trade, because maybe when the trade finally comes in on the side that doesn't have a whole lot of volume, maybe there's no trading going on right now at the other side. So you have to look to see to make sure the open interest and the volume is decent where they can put the trade on them immediately. So I'll go back to. So anyways, you could see what was happening here. Look at your little morning or evening star signal failure right at the T-line. And what is the assessment of this trend? Well, we already know it's a downtrend and it's not getting up through the T-line, and it was rolling over and then gapping down and then followed by a doji sandwich. That was a good, strong indication we're still in a strong downtrend. So that one, I think, had the volume that we could go ahead and do the spreads. However, on Carvana, I think we did the September, I can't remember which one that we did, but the volume was good on one and wasn't good on the other. So we couldn't put a spread, so we just bought the puts outright. Now again, you're not, I won't even go into that. We'll go into all the details of spreads. Again, they're very simple and they're much more logical than just buying a put or buying a call. All right, Magic, we'll find something for you to pacify your drastic thirst for a good put spread. So here's the obvious, and I say the obvious. We know what the signals look like. And look where that signal occurred, at a level that the price has failed already. So that becomes a resistance level that needed to break through. Then you had your shooting star, your evening star signal, and trading lower. Volume is muted. Can we send in questions for discussion on S? Jim? Oh, on Saturday? Oh, yes. That's the whole purpose of these sessions. It's going to be a full day session. It's advertised as going from 10 to 2. Figure on probably 9:30 to, if we get out before 4, you'll be lucky. So have the pizza on hand. And we don't leave until everybody's questions are answered. Okay. Mark, I think probably, so we'll go back and, but anyways, so what is the trade factor now? Well, you've got an evening star signal. It failed at this level. It's bobbed up and down a couple times. If they start trading back below the 50, might be on a strong downtrend. Look at your stochastics rolling over. SP, that's probably was a good trade. Now, this is why I always tell people observe the obvious when it comes to candlestick signals. Where did this uptrend start? With that morning star signal, smack dab off the 50, which everybody is watching. So what can we assume when we see a buy signal off the 50? That's where all the big money is deciding that's where they're going to buy, because the 50 is a good place to act as support. And where did this all occur as far as our stochastics? Down here in the oversold area. So buying right here was telling you what? They were confirming the Morningstar signal, bouncing off the 50, stochastic coming up. This is just that probability factor we can see much more clearly based upon the signals that occur at support levels, or a sell signal that occurs at a resistance level. So this is, yes, so this is what you can kind of not anticipate, but if I can make this smaller. Oh. Way over here. Your double top. And look what the evidence was. Big bearish engulfing. Big bearish engulfing. Started that downtrend. Now that's not an unusual chart for the past year. We made a ton of money on shorting Carvana. See if I can make this smaller. Carvana came from the 375 and eventually bottomed out in around the $20 area. So look how easy this was to trade. Started trading off, that out of the way. Supported at the 200, failed at the 50 in a downtrend. There was times you'd close it out, go short again. And this is what I always say when I say observe the obvious. Look where it failed. Whoops. There's your bearish engulfing signal, right smack dab on the 50. Started trading lower. What did that imply? That the downtrend was still in progress. And then notice, I'm going to get off base here a little bit. This is the most important trend indicator you're going to come across. And the reason I say that is, look how you could have stayed short all the way down, even to this point, and then gone short again. But what did this do right here if you know that you stay short below the T-line? If you're like most people, and I put myself in that category before candlesticks came along, if I ever had a profit in a trade, I was just happier than a pig in doo-doo. I'm thinking, oh man, I've got a profit. I better take a profit because I sure would look stupid if I had a profit and I let it go back to be a loss. So I'm just going to take a profit, which had nothing to do with what the trend was doing. So the T-line is probably one of your strongest factors for keeping your emotions and, I'll say it in my case, my stupid trading decisions out of the way. Now I know I can just comfortably hang on to this position, short position, until I see a buy signal. And anyways, so now you can see what's happening again. Back below the T-line, you did it with a strong gap down. So the reason I love to point this out is after being the worst investor in the world when I first got out of college, was a stockbroker for 8 years. Now, at least I can make very intelligent or semi-intelligent decisions based upon what the charts are telling us. I think we did a video. So now getting off base. If we can analyze this as still being bearish, would I buy puts here? Probably not as enthusiastically as if I'm looking at stochastics just coming out of the oversold or overbought area. But we think there's more downsides. That's a perfect place to put spreads on because you got, again, less money involved and it doesn't have to move as much to make a good percentage profit. All right, so let's take a look at some things that you would be doing on the opposite side, or your decision-making process. Look at your left-right combo, then your doji, then it opens positive and trades positive. So if you were aggressive, then up there's my doji sandwich coming out of the oversold area. I'm above the T line. If it was up here, what color candle do you have? You have a big green candle. Again, your doji sandwich. That would be a doji sandwich. But if you see it start coming back down through, especially back down through where it opened, what type of signal does that leave you with? Definitely not a doji sandwich. It's not doing what you would suspect it should be doing. You close it out. And this is part of the trading that most people have a hard time, acknowledging, is that not every trade they're going to put on. As a matter of fact, I use the number 30%, that approximately 30% of the trades that you're going to put on aren't going to work. Now, that's not because the trading system is bad. That's just reality. Even the best trading systems in the world, which I think they all fall below candlestick analysis, are going to have losing trade setups. A successful investor needs to realize that and not take it emotionally, which I used to. But if I bought up here and it came back here, I'm just asking myself, how stupid can you be? What was wrong with that? What's wrong with your analysis? Then I realized there wasn't anything. That's part of that. Cut your losses short, let your profits run. Take your loss. I'd rather have a small loss and then go find another good trade. Well, I got way off base there, didn't I? Same thing with net. Bullish engulfing. Trading up here, bouncing off the 50. This had every element of being a good trade. Oh, that's why there's no questions. Darren, yes, you're taking the advice from one of the worst investors in the world until candlesticks came along. Darren, if I was buying this one because it set up nicely, the market was trading positive, and I could see this was a doji sandwich, high probability trade, and I went after it. Well, if it turned around and came back down here, what signal is that now? Well, it's definitely not a doji sandwich. Close it out. What's that telling you about the strength of this move to the upside? You're still caught in a downtrend. Oops, this is why I wasn't hearing your question. Didn't. That's going to be another thing that we'll do, Mark, is there are times when you start adding up all the indications, the market, even though there's not a true sell signal, there's a lot of factors that you can recognize to say, well, the probabilities are starting to go against me to be staying long, so maybe I close out the position here and wait for it to break out into a new territory. But that's a whole different story. That'll be a night where we say, when do you take profits? And the most relevant is you're looking to take profits when you see a candlestick sell signal in the overbought area. Another one is the further away you move from the T line, the higher the probability to come back and test it. But we'll do that tonight. Mark, yes, but that's where once you know what's happening in the candlestick signals, you're going to be much more mentally ready to start adding shorts or going short. So now I forgot what I was saying. Net. So if I had bought net up here, I'd have closed it out here. Because now what do I need to see after a doji? See how it opens. Whose handwriting is this? All right, so here's another example. I guess we had it before. Notice when the downtrend started, I also have the 34 EMA on my charts because they work fairly effectively. And then you can see what happened yesterday. They took it right up to the T-line and failed. When you see that type of signal or that type of setup, expect more downside. Now, look where you're sitting, right here. So what's your decision process? Again, the doji rule. If they open it positive, they're supporting right here. If they open it lower, they're breaking this level, and now you're in wave 3 to the downside. Yeah, hold on. You guys are... So can we short net? You could, yes. So that's a strong reversal signal, and look where it occurred. Right there. This was an obvious support level, and it's closed just below that. So very simple. If this opened lower tomorrow, what type of pattern are we looking at? Wave 1, wave 2, going into wave 3. Yeah, been seeing lithium in an uptrend. Now, after today's trade, and I'm getting off base here a little bit, that tells me, I probably want to be closing that out. Not that I don't think it's still in an uptrend, but what are all the factors that we're analyzing right now? The fact that the market is still going in this direction, they're starting to sell it off, close out the ones that have been showing strength, but now are being sold off, not because they're being sold off, it's because everybody's getting a bearish sentiment. Again, we know that you want to go with the flow. So any trade that you have that might not be acting very well, I mean, Fry batteries is still in this uptrend, but what's our analysis about this uptrend? We're right at the top of this trend channel, and it did a spinning top. I'm going to be careful we're not seeing this back off to the bottom of the trend. Why would we be more concerned about that? Because, again, the market is still selling off. AMBA, that same scenario. Took it up, came back down. Now look where it's trading. Traded lower today and closed below that level. If this opens lower tomorrow, this opens lower tomorrow, what can we assume about our trend? Wave 1, wave 2, going into wave 3. Now, this is what we're going to be analyzing again on Saturday. If we analyze this and say, all right, if this opens lower tomorrow, we should be in wave 3. But as I look at this, I already know that if I'm shorting this tomorrow, where do I not want to see it close? Probably don't want to see it close more than halfway up this candle, because if they open it lower and came back up through the halfway point of that candle, where is it trading? It's trading back up into this range again, which isn't a very good short. Looking mainly for down signals. Why? Well, Walter, why do you think we would be looking for bearish signals in this market? The SM and SQQ just broke out of, oh, was that a rhetorical question you're asking yourself? Well. You'd kind of give that a head and shoulders, but I'd give it more of a J-hook pattern. So if this is wave one, where do we think wave three is likely to move? Right back up into this area. Yeah, let me finish. I've got Sava, two more down. Hold on. Here's another one that we know the wave three is in progress, and when it came back up and failed, when it traded lower today, where was it? Down through this level. When you're measuring wave one, equal magnitude wave three, do you mean it absolute dollar terms or percentage? Just about the same length here. And it's not an exacting, doesn't have to be an exact calculation. All we really want to feel is this is wave one. Wave three is going to be approximately the same. Now, when I say approximately, if it gets to that level where wave three is about the same as wave one, what am I a little bit more conscious about? I'm starting to see if there's buy signals at those levels. So when do we think the selling has stopped? When obviously in our case, we can see buy signals. Wave one, wave three down here. Buy signals is a good place to start taking profits. Well, it could be a good short, yes. Because it could still be heading for wave three, which if this is wave one, you're looking at down here somewhere. And so if you don't want to be shorting it at this level, again, that's a place to maybe do a spread where you got less risk. And if it moves, you're still making a good percentage return from that trade. Neckline is at 50. Okay. Oh, Walter. Neckline is at 50. All right. Okay, so do you want to go long and something that has a market or market background of a lot of selling? Well, there's 9,500 trading entities. Doing simple scans, you can find the best shorts, and on any given day, no matter which way the market's going, if the market's tanking, you're still going to find some good long positions. Which, would I go after something aggressively? We saw the breakout, the bobble breakout yesterday. Now we saw the potential doji sandwich. Now we can ask if we're trading it, say, where's the strength going to be? Well, as soon as it came up through that level, that was a good indication the bulls were definitely in control. The next thing is, where do I go if I want to trade this? Go to the 10-minute chart. You can see after it broke out today, was that part of the day? Yes, that was today. What was the one compelling aspect to this uptrend? They could never close it below the 10-minute T-line. Okay, and then oh wow, this one, I don't know whether I picked that one up to go short. Yes, I did. And ALT. Well, for crying out loud, why did I do this one? I think this one after at the close was up closer. So I could get ready to do a doji sandwich. But you can see that slow curve breakout. Oh, my still, that's why. Huh, thank you. Trying to figure out what was I thinking. What was the So there's your trend kicker signal. Opens here, closes here, gaps up. That's a strong bullish indication. And let's see. If yeah, Joel, that would be a toughie. What? Let's see. What was the other one that we did off the wrong chart? Oh, your little morning star type signal. So you could start watching this, but what would be your first target to see what it does at the T line? On Saba, I guess it would be the same scenario, that it would have to show strength on the open, and if it started trading positive, I wouldn't want to see it trade back below today's close, because that would tell you that the sellers are obviously taking control. If you're long, the T line should be up here, so you probably want to use about the halfway point. Okay, so always call this putting the stars in alignment. If you can analyze which direction the market is going and then find the strongest sell signals, that's kind of putting everything in order. There's going to be a lot of downtrending stocks in this downtrending market. What we're trying to find is the strongest moves to the downside while this market is heading down. Would you rather go after stocks with sell signals at the 50 now, or stocks going into wave 3 after T9 failure? I don't know. You're looking at all of that to see which ones would be your best trade setups. Some of them might be doing a strong sell signal at the T line, and something like this with a bearish flutter kicker signal at the 50. If it opened lower, yeah, it tells you there's going to be a lot more downside. Darn, that's what we've just gone through. The first analysis is and that's what we're going to do all day Saturday. First analysis is we had a session, a mini session, when was it, a couple weekends ago, where we concentrated on analyzing what the market was doing, what the direction of the market was. That's our first analysis. Now, I'm seeing this all day long, not all day long, for the last couple months. Yep, a lot of people in the chat room are still running after the things that are breaking out to the bullish side. The problem with things breaking out to the bullish side is if the market is heading down, it acts like a weight. I mean, you still have to go with what investor sentiment is revealing. But if investor sentiment in the whole general market is bearish, and you see something trading positive, got to be a little bit more conscious of the fact that maybe when the buying runs out, the bears start stepping back in, again, because of the weight of the market. Now, less inclined that if you're in a bullish mode and you see bullish trades, obviously investor sentiment is going positive. You're more than likely going to see a continuation of that uptrend. Okay. And I don't have any shorts ready tonight just because the darn computer screwed up and the dog pooped on the rug. Buy on the dips? No. I look at all these, and this is where you should be. This is where you should be not listening to anybody else. You should be letting the most consistent indicator tell you what to do, and that's the market itself. Yeah, so I hear, oh, I think it's on CNBC. They'll ask for analysts where they should be buying Apple, and they say, well, we're going to start nibbling at it at such and such a level and another such a level. They have no idea where it's going to go. I mean, we've got a much more accurate read of whether they're buying yet or not. So I've gotten way off track again. So no, Alan, you don't buy on the dips. You buy when the market tells you it's time to start buying. So if this was something that told you to start buying Apple, this told you to get right back out of it because it was closing back below the T line. And I kind of, again, smirk, snicker, whatever. They say, oh, we're buying a part of our positions as it pulls back, and we'll buy more if it goes lower. And I'm thinking, why the heck are you buying stock if you think it's still going lower? Anyways, hold on, I got to get off this little soapbox here. Okay, any other questions on candlestick analysis? So part of the alignment process, whoever asked that earlier, is getting everything. Oh, did I start explaining and not finish? The direction of the market, and then scanning for the strongest signals or patterns in that direction, and then waiting for entry confirmation, and again, on every trade that I should, or what we're going to kind of analyze is on every trade setup, say we decided we're going to short NVIDIA. So we've already mentally thought, or they're thinking, all right, if this opens lower, we're still in a downtrend. Then I immediately, in that same glance, say, well, if I'm trading or shorting this when it's trading lower, where would I not want to see it trade? I wouldn't want to see it trade back up above this halfway point of this candle, because that tells me the bears aren't very strong they might be supporting here. Is analysis time frame dependent, independent? Analysis time frame is dependent on the time frame you want to be holding a position. Now, obviously, if you're a day trader, you probably want to look at the daily chart and then be trading off intraday charts. If you're a swing trader, you're probably trading off the daily chart. If you're a longer term trader, you might be using the daily, weekly, monthly combination. When they say that they're buying on the way down, do you think any of that is short covering? No, remember, most money managers or portfolio managers are buying for the long term, So when they're saying they're buying they're buying right here, they're buying parts, and if it goes down further, they're buying more. And so I often thought, well, if you're buying and it was starting to go down further, why are you holding on to the position you got? Okay, what candles can you show that suggest a bear put spread now? Oh, did you do Wayfair? Didn't we suggest Wayfair earlier? And you might take a look at NVIDIA as a put spread if it opens lower. Yeah, but even that's not even the right, Jim, that's not even the right strategy. That's kind of a hedge for the money manager, not the hedge for the investor. So, okay. Any other questions? If not, try to keep your request to one since we're this late. So Jim, go ahead and do the double line. And in 4.2 seconds, do the next double line. Goss, we recommended a short today. I don't know what the volume is on this one. I don't think it was big enough to be able to do a spread. Now Tesla, that would be more viable because of the volume. But if this opened lower, you could be doing a put spread on it. AP, that's a toughie. The breakout, and then with it closing or opening down here, what did that tell you? Pretty much told you the bulls aren't that strong. So the only way you would want to trade this one is on strength, meaning I'd want to see it trade above at least that high or that high to indicate the bulls were still working on this one. That's a nothing chart, Seuss. What signal is that right there? I'll speed it up. That's not a signal. That's right now just an update. Notice it's not a bullish engulfing and it's not a bullish harami. So if I had my druthers, I'd disregard it and move on to something else. Now that doesn't mean it won't go higher. I just rather work with something that tells me the probabilities are much greater that can go higher. So there's your bearish kind of your doji sandwich, breaking down through this level, that one's a good one to short because that kind of confirms you're probably in wave 1, wave 2 that failed at the 50, going into wave 3. Now, whoops, there's the 200 up there. All right. And edit, same scenario. Got a little bearish engulfing, kind of a rounding top. And they have traded back below this kind of support level. That one you could be shorting. NVIDIA, if this opens lower tomorrow, kind of breaking this level, you could be shorting Ford. When it gapped down, there's your bearish kicker signal. Failure at the 50. Filled this gap. Right now, there's nothing telling you not to stay short. Wouldn't necessarily short it here, but you could still, you want to stay short. Roku. Another one you could probably be shorting. It's not quite a bearish kicker signal, but the fact that it broke this level tells you there could be more downside. Advanced micro, stay short. There's your bearish J-hook pattern. Look at your bearish best friend. Look at your failure. And then when they opened it lower, told you they weren't supporting this level. Another one, you could be shorting on weakness. And at this level, I would probably, if I was shorting, that'd probably be where I'd be putting on a bear spread because we're getting close to the oversold area. And where's your next feasible target? Right here, which is still a decent distance away. On another one where you had the shooting star type failure and you broke this support level, you broke the 50, I would think your next target is the 200-day moving average. The S&P, stay short. That's a good short also. Again, the failure, kind of a rounding top, and the failure to hold the 50-day moving average. What most people would call kind of a head and shoulders, the Japanese rice traders would call just 3 mountains. Stay short on this one. DraftKings, observe the obvious. Where was the failure? Right smack dab at the 50, which is what everybody else is watching. Failed at the 50. I'm sorry, at the 200. Failed at the 200, closed below the T-line, couldn't hold the 50, and now you're sitting right about there. The Stochastic's heading down. If they break that level, a lot more downside. And again, that's probably going to be a result of the overall market. Same thing with Tesla. If this opens lower tomorrow, at least figure they're coming back to test this area. And then maybe more downside. Oh, that one you could also be shorting on weakness. First target would be right here that everybody could see, and then the second target would be your 200. Apple came back a little bit. If I had bought long here, I would have closed it out here. And now you could possibly think about going short because if it opens lower tomorrow, what's it forming? A bearish doji sandwich, also kind of a J-hook type pattern. The energy sector still drifting lower. I would just stay short on that one. JP Morgan. Anytime you see the big financials trading off, that means the market's going to be trading off. So you could be short this one. Goldman, same thing. Morgan Stanley, same thing. Select one. A central one. That one you could get ready to short. You'd want to have further confirmation that it's getting down through that level. And Duke. Just remember on Duke, you're not going to get a big percentage move. But if you're short right now, you stay short. You're getting toward the oversold area. If I was short, I'd have right now a safety stop at today's high. If it comes up through there, that means they're supporting kind of right in this area. Boeing was trading lower. Wouldn't necessarily short it here, but I would stay short if I was short. Etsy. That one is a nice slow curve breakdown with a doji sandwich. That one you could be shorting. Instead of shorting, would you buy puts? You can do whatever is your trading style are. If you're an option trader, you trade options. If you're a stock trader, you trade stocks. If you're a combination of both, maybe you buy or short some of the stock and add puts to that trade. Okay. Nothing yet to show there's any change of investor sentiment. Wave 1, prospect for wave 3 tells us we have more downside. So with that, we'll see everybody bright and early in the chat room tomorrow. We'll see you then.